investing in right now. What, and I want to get into this right now, especially in these times, because as we've seen, the inflation right now is, I think, at 8 point something percent.
Yeah.
Even though I think it's higher than that, but
Yeah, just what they have on paper.
that's just what, the CPI says and all these numbers. But what companies do you think are the best to or what investments do you think are the best investments to get into, or sectors in the market in times of high inflation?
Yeah. So you have what you call your cyclical companies, right? Or your cyclical sectors, right? Real estate, for example, tech, and these are sectors that perform well when the economy is performing well. On the contrary, you have sectors that perform well when the economy is not doing so great. So right now, the economy is actually super strong, which is, I think, misunderstood. The reason we have high inflation, let's kind of going back. Let's start from the beginning, right? The reason we have high inflation is because unemployment is extremely low. A bunch of money has been pumped into the economy ever since COVID. You have a bunch of fiscal stimulus, and then monetary policy, which is the Federal Reserve, has kept interest rates low for the last 10 to 12 years. So that's why inflation is where it is. Now, to reverse that, they're going to have to raise interest rates. For anybody that doesn't know, this is like economics 101. They have to raise interest rates, and then hopefully, this is hopeful, we can slow down inflation and achieve what's called a soft landing, which is like the best case scenario where we don't go into a recession. Is that going to happen? Nobody knows, and that's really the answer. People are speculating. We don't know. If it were to happen and we go into a recession, you have what's called defensive sectors, and this is kind of bringing it full circle, which are consumer staples, healthcare, I think, and these are ones that I have high conviction in and I've done the research on. They tend to perform well before and after recessionary periods. So these are two sectors that have done great. Additionally, I think one that's been a little bit slept on and kind of beaten down are financials. You have a lot of CEOs coming out right now talking about the situation. Jamie Dimon, for example, a CEO of JP Morgan, he came out talking about, there's a hurricane. There might be a hurricane on the horizon. We don't know the degree to which the hurricane will hit the economy. But obviously what they're saying does cause a lot of fear. Deutsche Bank came out and they said a recession is imminent. It's going to be terrible. And you have a bunch of, and Morgan Stanley, for example, has a 30% chance of a recession happening. So it's good to be prepared in case that does happen. So we did the analysis at my firm. We came up with consumer staples, healthcare, and we also looked at financials just because the valuations have been beaten down recently a little bit. The overall market, we think, could still be a little bit overpriced or range bound. But again, if you're a long-term investor,
that doesn't worry you.
Throw it out the window.
This
is
you
the
have
time.
To throw it out the
exactly.
window. This is the time where you're going to purchase the stocks that get hit the most, not the ones that are going to be performing.
I think this is a great advice for somebody starting. You don't have to invest all your money at once. A smart way to do it, for example, if you're new to this, is do it in tranches. So maybe you make your first investment now. In 3 months, the market's down. You make your second investment, it goes up. Maybe you make your third investment 3 months after that. That way you can cost average. And that just means that you're getting in at an average price. You're not getting in at the top. You're not getting in at the bottom. Maybe you're getting somewhere in the middle, which is what you want to do when you're a long-term investor.
100%. And I actually, all the friends that come up to me that ask me, what should I invest in? I always give them the same advice. I go, if you don't know how to value a company, invest in the S&P 500, and every single paycheck that you get, if you get $1,000 paycheck every 2 weeks, get 10% of that, $100, and put it into the S&P 500. Don't worry if it's gone up, if it's gone down. Just do it every single time.
That's golden advice, guys. You don't need to. Honestly, if you're not into this world and you don't want to worry about it,
don't pick stocks. You're just gambling. If you're going to be picking stocks and you're not understanding how to value a company, if you don't understand how to value a company and you're picking stocks, it's the same exact thing as just going to the casino and putting your money on black.
Exactly.
It's exactly what you're doing.